Despite the latest drop across the board for cryptocurrencies to start 2022, Ark Invest's Cathy Wood had a positive outlook toward crypto. The Ark Invest founder is looking towards the long term and sees Ethereum reaching a $20 trillion market cap by 2030. So what makes Cathy Wood believe in the bright future of crypto, and what has she to say about making your next investment? Let's find out. Addressing the concerns. Cathy Wood recently addressed fears associated with the systemic collapse of the crypto collapse. For those wondering, the cryptocurrency market crash of 2022 was a really nasty one. Overall, the market has slumped approximately 70% in value from its record all-time high last year in November, while other tokens like Dogecoin, Avalanche, and Solana, among others, have taken up to a 90% hit. By June, the global crypto market cap shrunk from $1 trillion to $977 billion. The global cryptocurrency market cap has fallen by over $2 trillion after touching the $3 trillion mark in November last year. The price of almost every top coin is now worth half or even less than their all-time high. It just goes to show how extremely volatile the crypto market can be. The immediate trigger for the crypto crash appears to be a massive sell-off by investors amid heightened inflation fears and pausing of withdrawal by crypto lending service Celsius. Investors are also continuing to stay away from riskier assets, which is reflecting in the stock markets as well. Bitcoin, the biggest and most popular cryptocurrency, fell below $22,000, while almost all altcoins, starting from Ethereum, bled. Ethereum has fallen to its lowest level in more than 14 months, trading around $1,155. Solana has fallen by more than 15% and is hovering around the $27 mark, according to bitcoinsforcards.com data. This data is as per June, when everyone was concerned about the sudden crash. Cathy Wood had her own concerns about the crypto market crash and addressed them at the Ark's July Market Update webinar. Wood expressed concerns that the crypto market had its worst quarter since 2011, despite it being a much more mature market than it was back then. Speaking of Bitcoin, Wood seemed optimistic, saying, "It's Bitcoin still higher than pre-COVID $7,000 to $10,000 range, and it's just about at its 2017 high, so this could be some support." However, she highlighted the fact that BTC is trading below its 200-week moving average as a point of concern. It is below its 200-week moving average, which is at $22,500, so there is some concern that that is the new resistance now. Ark Invest recently loaded up on crypto-related portfolio stocks like Coinbase Global Inc. and Block Inc. in its flagship fund Ark Innovation ETF. Wood also said that the shakeout in crypto markets has happened sooner and faster than it would have in the traditional financial markets. Still, even at this stage, the fact that investors like Morgan Creek are attempting to counter FTX's BlockFi bailout is a positive sign in her view. These are people who really know what's going on in DeFi, and if they're willing to step in here, that has increased my confidence to some extent that the systemic risk is diminishing here, she said. Cathy Wood predicts Ethereum to cross $1 trillion. Cathy Wood might not feel great about the recent crypto crash, which has only started to recover now. However, despite the fact, she has some pretty high hopes for the second most popular crypto token, Ethereum. Based on market cap, Ethereum has seen its price drop 30% so far in 2022. That comes after reaching its own all-time high in November, along with Bitcoin. Nonetheless, it's important to see the forest through the trees. In the long-term horizon, Ethereum's use case could continue to expand exponentially. The second largest cryptocurrency, according to Ark Invest, will meet or surpass a $20 trillion market capitalization by 2030, a Markets Insider report says. Each coin would be priced at around $170,000 to $180,000. Based on its current price of about $2,480, either would have to jump by about 7,200% to meet the firm's target. As financial services move on-chain, decentralized networks are likely to take share from existing financial intermediaries, a report by Ark Invest says. Ethereum's blockchain network forms the basis for other developers to create their own cryptocurrencies. Given that specific use case versus Bitcoin's utility as a store of value, Ethereum has the potential to displace many traditional financial services, according to Wood. Ethereum fees drop. Another case for increasing Ethereum demand is a drop in fees. The second leading cryptocurrency's fees have fallen along with its price, giving more reason for users to transact with Ethereum. Ethereum's average network fees have dropped to the lowest value in 30 days at 0.0096 Ether or $24.64 per transaction, a Bitcoin.com article says. Median-sized Ethereum fees are lower today as well, as fees are between $8.37 to $10.82 per transaction, as Ether fees haven't been this low since January 1. In the meantime, more Ethereum support is rising amongst the developer community. Take, for example, Etherscan, an application that helps make the Ethereum blockchain network more accessible to the masses. The Etherscan app keeps tracks of blockchain transactions on the Ethereum network, a Cointelegraph article explains. The app then displays the results like a search engine. This allows users to find the details of transactions on the Ethereum blockchain, which may give someone peace of mind if their transferred funds have not yet appeared in their wallet, the article adds further. Crypto is set to recover later this year. While the crypto crash was unexpected, the crypto market won't lie in the same state as it did a couple of weeks ago, and Cathy Wood is right in predicting Ethereum price rise for the long term. According to experts, Bitcoin is set to hit the $100,000 mark in the near future. Experts say that it has been quite easy to predict when Bitcoin will reach 100,000, given its previous engagements with some of the top brands in the world and rapid increase in market value. Most skeptics believe that the value of BTC will probably plummet as low as $10,000 before it finally moves toward $30,000. To predict the time when Bitcoin will reach $100,000 is probably hard, but many people in holding for the long term is key. Cathy Wood also gave her opinion on other digital assets, for instance, NFTs. Wood believes digital property rights related to non-fungible tokens and decentralized finance that have underpinned the emergence of Web3 are going to become incredibly important. DeFi has taken off, and we're impressed at how robust the ecosystem has been, Wood said on CNBC's Squawk Box, adding that the token revolution surrounding NFTs is most in its infancy. The surge in NFTs is still fairly new, but massive amounts of money have already exchanged hands among collectors. Since 2017, for example, NFT collectibles have generated over $6.2 billion in sales, while digital art has generated over $1.9 billion, according to Non-Fungible, which tracks historical sales data on NFTs. We do believe that digital property rights, which is what NFTs represent, are going to become incredibly important, Wood said, adding that her economic background has taught her the value of property rights when it comes to lifting people out of poverty. Creators in the NFT space have long made the same case, and investors like Wood have been quick to assert that long-term value in digital assets will come from their utility. It's a message that's been difficult for institutional investors to digest, as collectible artwork, such as the prominent Bored Ape Yacht Club, has taken center stage in the early days of NFTs. These NFT collections have experienced a significant slide in value over the past few months. Bored Ape Yacht Club and the equally hyped CryptoPunks recently saw prices fall precipitously. Some tech icons think more pain is coming. Eric Schmidt, former Google executive chairman and CEO, and Schmidt Futures co-founder, told CNBC's Squawk Box from the Aspen Ideas Festival on Tuesday, "If you assume that Web3 was 10 times overhyped and it's corrected 5 times, it's got some more to go." But Wood's comments suggest she is undeterred by the recent sell-off. "We're believers, and we think the ecosystem, if it consolidates, is not a bad thing. We do think that digital wallets are going to be one of the most important outcomes here. They are effectively bank branches in our pockets," Wood said. "These are going to be huge opportunities." She definitely does seem optimistic about the future of crypto. But what are your thoughts on this? Do let us know in the comments below, and thanks for watching.